What about China's relation with Australia's iron ore, and how does that pan out? How does that impact sentiment?
Look, it's interesting. China needs iron ore. They're buying over 1 billion tonnes per year. In fact, this year they've bought the last year's 12 months in 11 months. So they buy a lot of iron ore. In fact, this year they'll buy well over 1.1 billion tonnes of iron ore. We supply about 60% of their iron ore, so we're a large part of what they do. But I think that the key message behind this is not what Australia means today and not what China's buying today, but what will happen in 3 to 5 years' time. And that direction or that narrative that we need to think about, that started several years ago. If anything, during the last decade, it was about diversity of supply. It's where can China source? How can they diversify away from Australia and also Brazil? I think it was stepped up with the Brazilian accidents in 2015 with the first dam incident and again in 2019. And partly it's caught up in this current trade debate as well. But China needs to diversify their supply, and I think the country where they will most likely do that, which has been simmering for some time, is a country in West Africa called Guinea. And large projects there which will ultimately be what we'd call the Western Australia or the Brazil of the iron ore market in the future, and they'll be that third dominant source of supply and probably largely China funded and developed. So we need to be very aware of not what's happening today, but where this market will be in 5 years' time, and that's where price will be substantially lower. I'm not talking $5, $10 lower, but multiples lower.
Rock, but what about next year? There's been a lot of speculation here in Australia from some quarters suggesting that China could impose some kind of tariff on iron ore. We've talked about this before, but realistically, do you think that's even more likely based off of what we've seen today when it does come to perhaps the coal actions?
Look, those issues certainly going to play out well. I think that, again, we need to be very careful about the actions we take today for what it means not for tomorrow, but what it means for 5 to 10 years' time. And we're in a commodity market, and commodities can be sourced from anywhere in the world. At the moment, Australia and Brazil dominate. We're encouraging potentially behaviour which will make people look to diversify elsewhere. And we saw this in the Japanese steel industry in the early 80s as they diversified their supply away from Australia into the likes of the US and Canada. So I've been wanting to take a more medium to longer term perspective about where I sell my iron ore, who will buy my iron ore, and what that price will be. And if I take steps today which will push somebody in a certain direction, that could have an impact on the pricing that I get in the long term. Just think of it this way: well, every $1 lower the price is of iron ore in the long term, on an annual basis, the Chinese save about $1.1 billion savings per year. So it's $1 trillion. A billion tonnes at $1 savings done, $1 billion a year savings. So you multiply that by a couple of dollars per tonne, it's a big saving per year. So there's a reason for trying to lower the cost longer term. So certainly the medium long term view is really where I think we need to be focused on.